Address the listing of the day. Amit Bakshi, MD of Eris Lifescences, now joins us. Amit, good morning. So the listing is slightly above issue prices. Issue price. I want to understand. You are a pure domestic company, so not exposed to US risk. But the problem that analysts are saying is that you have too much concentrated in just your top 10 or 15 drugs. I think 90 to 95%. Is that strategy going to continue, or are you going to de-risk, whether in terms of geography or in terms of products?
Yeah, so, what you are saying is right, but what happens is we are talking about 10, 15 mother brands. Now, these mother brands are not, is the group of brands which are associated with each other. So if you look at the number of SKUs which we are talking about in these 10 mother brands, they would be, say, 89 to 100. So while it looks concentrated by 10, but when you actually dig it down, they are the set of SKUs which make it to 10. But they are fairly large, and then they represent a very, very large market as of now.
Okay. Hi, Amit. Let me ask you on your financials then. You've enjoyed a strong revenue growth of about 20% on an average in the last 3 or 4 years. Your margins have improved to 37%, 34% thereabout. Is there any reason to believe that this kind of a revenue as well as margin trajectory will not continue in the future? What's your outlook looking like?
So look, I would not say that this is something which we had, which is the best which the company could deliver. Even today, the major, when you look at our financials and you look at our numbers, especially the EBITDA numbers, the major metrics, there is the productivity metrics. So what happens, as soon as the productivity kicks in, you see the EBITDA swelling. We are still far, far below the productivity levels which we would like to get. Because please understand, we are a young company and we had people coming in at different point of time, say as new as 1 year and as new as 2 years. So those are the people where the EBITDA as of now is very soft, and these people, once they gain in productivity, we see a lot of that productivity resulting into EBITDA.
Amit, hi. So the one risk that analysts do point out is the fact that you're 100% domestic focused, and in the domestic market, we're increasingly getting more and more regulatory news, more drugs coming under price control, doctors being told to prescribe now generic names and not branded names. Isn't that a risk to your business in some way, and how do you plan to mitigate it?
So, there are a couple of things which you have, asked, which you have asked together. Look, as far as the pricing issue is concerned, look, as of now, we have taken into our stride the NLEM, whatever NLEM had to come through. It took us some time, and there were certain blips. But as of now, we are good with the NLEM which had come. So the price reduction has happened. We have kind of rearranged our business to make sure that even in this environment we keep on delivering. So that's how it works out. As things open, we would like to reorganize our effort and reorganize our strategy, and then make sure that we keep on growing. So that's what I can say as of now.
Okay, fair point. You had a decent CAGR in EPS over the last 3 years, I think around 40%. But as the base effect moves on, what's a reasonable rate to assume going forward, say over the next 4 or 5 years?
So look, I generally think so. EPS is then a calculation which follows from top to bottom. But I feel that we are good for a reasonably big double-digit growth, both on the top line and little more, because when you work with better margins, as in the case we are because of the portfolio, more of it falls down in the bottom line. So if you ask me, the bottom line would always outgrow the top line. That's how the nature of the business is. So that's where I would indicate that I think we are good to do that.
Okay, reasonably big double-digit revenue growth is what we should expect from Eris Lifesciences. Any export plans, Amit?
Not as of now, not in the foreseeable future.
Okay.
And Amit, I'll just come back to that point. You mentioned that you've already taken the price adjustments that you had to take because of NLEM. Going forward, should we expect any further strain on margins because of that, or is it already built in? And also give us a sense of the market share issues because of this move towards generic prescriptions and not branded prescriptions. So has that been factored into the guidance you just gave us on the top line?
So that was not a guidance. That was we have not started giving guidance as of now. That's just the broad indication of what we would like to do ourselves. For guidance, I would need more time to get my numbers work out. So please don't take it as a guidance. As far as the second question of yours, whether we have actually factored in what is going to be the result of those couple of regulatory things which you are talking. So frankly, we haven't heard anything as of now formally. So there's no question of, looking into that unless and until you have something which is more concrete and you start working on that.
Okay, Amit, thank you very much for joining in, and all the best. That's the word coming in from Eris Lifescences. Dipped a tad bit into the red, but a flattish opening as the company makes its stock debut. Slip into a very short break. We'll come back and focus on the stock of the day, Axis Bank.